right, so the moral of the story is this. Extensions. If you've ever wondered why people stand in line at the post office on the night of April 15th, it's because it's an important date. Okay? April 15th means this. Three things. Interest, penalty, failure to pay, and failure to file. Okay. All of those things come into play at midnight on April 15th. That's why we go down there and we file our tax returns, or if we can't file our tax returns, we file an extension. So you have to understand the consequences of not doing an extension. First of all, the most important thing about an extension is it's an estimate. It's not exact. It doesn't have to be perfect. It's an estimate. You want to make the best estimate that you can. Okay? But it doesn't have to be perfect. So if you make an estimate of what your liability is going to be, and you are 90% correct, let's say that your actual liability when you file the tax return is $10,000, and you guessed that your liability is around $9,000, and you send in $9,000, you're within 10%. If you're within 10% accuracy, the government, the IRS, or your state, California, will only charge you interest beyond April 15th until you finally pay. Okay? So if you're 90% correct, you're only going to get charged interest. If you're outside of this time, now let's say you're not within 10% accuracy, or you don't have the money. I've got a guy that owes $160,000, and he doesn't have it. He's $40,000 short. That may be another reason some people file extensions, okay? So let's say you're outside of the range, and you only send in $8,000. Now, two things kick in. Interest and the failure to pay penalty. The failure to pay. Failure to pay is it's 0.5%, 0.005, 0.5% per month. So, and April 15th at midnight, as soon as the clock goes past that, that's your first 0.5%. They start right then and there. Okay. On May 15th, then you get another 0.5%, and that 0.5% will continue to accrue every month until you finally pay it off. Now, what happens if midnight, April 15th goes by, and you don't file the extension, or you don't file the tax return, or you don't file the extension? In that case, you get the failure to file penalty. 5% per month. You see the difference? 0.5% per month, 5% per month. So when that clock moves past midnight, April 15th, whatever your underpayment is, it's 5%. Okay, and that 5% continues to accrue up to a maximum of 25%. So that tiny little piece of paper going in to the mail stops this penalty, regardless of how much money you send out. That's why it's important. Now, special rules. Lily, you have a question? No, I said that at midnight on April the 15th is the first 5%. The question is, when does it go into effect? Midnight. That's why those people are waiting down on that line. That deadline is important. You don't get the postmark. Now, you're a different generation. When I first started doing taxes, we stood in line, okay, down at the post office. And I still went down to the post office. Probably up until about 10 years ago, I'd go down to the post office. I have all my stack of papers. One's going to IRS Fresno, IRS Ogden, payments. Payments went to San Francisco, payments for California. I'd have like 8 different certified envelopes. I'd have all the different extensions and everything. Now, it's all done electronically. But you still have to file it by midnight in your time zone. All right, so in summary, extensions are important. That tiny little piece of paper makes a difference, right?
Okay, now this is obviously important if you owe interest. If you don't owe any money,
Okay. Ray brings up the good question. Okay, this is only important if you owe money. Okay, Leela says no. Technically, he is right. These penalties, the interest, the failure to pay, and the failure to file are all based on the underpayment. Okay? In this case, the underpayment would be 1,000. In this case, it was 2,000. It's all based on that. But it is important. Why? Because failure to file a tax return is a crime. Okay? It's a crime. Now, if you don't put that little piece of paper in the mail on April 15th by midnight, they're not going to knock on you on the next door. But long term, it's a crime. All right, so anyhow, this is important. Now, a few, yeah.
So, for filing and payment.
Yes. Well, okay, the question is, April 15th is the deadline both for filing and payment. Really, it's a deadline for payment. But you don't have to file. You can get out of filing by putting this little piece of paper in there, the extension, Form 4868. Okay? The deadline, taxes always have to be paid by April 15th. They always have to be paid. Am I clear on that? Did I make that clear? They always have to be paid by April 15th, but you don't have to actually file the tax return if you put the extension in there. Yeah. Yep, Form 4868, we'll look at it. Yeah, failure to file is up to a maximum.
It's what part of the 25% is part of what? It's the tax or
It's the underpayment. Yes, the failure to file is a half 5% per month up to a maximum of 25%, and it's always calculated on the underpayment, the amount that you underpay. Now, a little side note for California, the different states are a little bit different. California now grants an automatic extension. They grant an automatic extension. If you don't owe, you don't have to do anything. You don't owe. April 15th gradually goes by. If you don't owe, then you don't have to put any paper in the mail. Okay? And that will take you up until October 15th. But if by October 15th comes by and you haven't filed the tax return, then the 5% penalty will kick in. Okay? Estimate. Say he had $65,000 of wages. He's single. He has $65,000 of wages. What else? He has interest income of $43. He has mortgage interest of $13,000. Okay, that's a deduction. $13,457. Right? And the thing that he doesn't know is that he sold some stock during the year. Let's say he sold some stock. He sold it for $10,000, but he doesn't know what his cost basis is. He lost his records. Okay? He has an idea of what it is, but he doesn't know for sure. That's the missing thing. That's why he can't file his tax return. So it's an estimate. He has to guess. If he has no idea, he could guess that he's going to get taxed on all $10,000. He could say, I'm pretty sure I paid maybe around $7,000 or $8,000. Okay? It's an estimate. It's a guess. So here, he would put his capital gain in here of $3,000. It's a guess. What's his adjusted gross income? $68,043. That's his guess. Single. He's entitled to a standard deduction of how much? For federal, how much? standard deduction? For federal. 6,100. His mortgage interest is more than that, so we'll use the 13,457, right? And he gets a personal exemption of how much? 3,900. And we're going to guess that this is short-term change. What's his taxable income? Anybody with the calculator? 68,043 minus 13,457 minus 3,900. Got to be less than that. Tracy, how much? 56,086 taxable income. What's his tax on that? Who has a federal book? Go to the table. What is his tax on that? Go to the table. His tax is 8,598. 8,598. And look on his withholding. How much federal income tax did he have withheld? $11,269, right? So he's actually entitled to what? A refund. Okay. So should he do nothing on April 15th? No, he should file the extension still. Even though he doesn't know, he should put that tiny piece of paper in the mail, file the extension, okay, and then when he ultimately files his tax return, he's actually entitled to a refund. So he's not going to be charged any interest, because there is no balance due. He's not going to be charged the failure to file penalty, because he put an extension in and there is no interest. He's not going to be charged the failure to file penalty, because he put in an extension and it doesn't have a balance due, right? Our extension, form 4868, and you just want to make sure that you get it in the mail. If you can pay that money, you pay it. If you can't pay it, you still want to get it in the mail. Okay, good enough.